Good evening. This is Ken at Tortoise Capital, and this is part 2 of the trade index analysis. Part 1 talked about the concept behind the ideas. We're building on the work of Chuck LeBeau. So this is the spreadsheet implementation. I'm going to show a set of trades from Glenn Osborne, who's been working on this in the advanced swing course. So these are all the long trades grouped together and all the short side trades. In order to make the index numbers sensible, you need to separate them out. These are symbols from all sources. They all tend to be typical or complementary patterns, and so we're going to group them all into one large bin for analysis. If you wanted to get further granularity, you could separate out by system or pattern or strategy to get even more fidelity. But we approach swing trading generally as a meta system, where we're taking a variety of symbols and strategies together and making some decisions. So it sort of makes sense to treat it as an entity for time framing. So that's how we'll proceed. If you wanted to break it out by symbol or by strategy alone, you really need to get at least 30 of each type together in order to have some significance to the analysis. So just to read the headers across, the 1 and the -1 simply refers, we need that when we're computing the net gains because of the directionality. Just some math, and then the directions long or short. This was the administrative trade number. This is the date the trade is taken, the symbol. I'm using a standard lot size of 100 just for computation purposes. Glenn's actual worksheet takes into account our multiples as well. For our purposes, we don't need to do that since we're simply just mapping entries and exits. His numbers look good on the risk-adjusted number as well. But that's a separate piece of analysis. This was the entry price. This was 100 shares times the entry price for the cost in. This was the date out. This was the exit price. This was the value of the position at exit. This was the net plus or minus for the trade, the percentage. Now, this is where we start getting into the calculations from XLQ and Excel. So this is going to count the number of days from entry to exit. It's then going to double that and add it to the entry date so that we can test the exit range. So we want to use the 2T time frame. So this trade lasted 12 days, and so we're going to go out 24 days. 24 days plus 18 January gives us 11 February. This is the XLQ formula for finding the highest high in the time frame between the date of entry and now the test exit date. The efficiency is computing how much of the maximum available move this achieves. So this, in this case, 44% of the gain was available. That's what the maximum trade availability would have been. This is how much of an improvement over the actual performance the perfect one would have been. This was the date of the highest high. We need that to compute the indexes. Now, the date net tells you whether or not the highest high was occurring before or after the date he actually exited. So all of these where the highest high occurs after, or that are in the negative, means that the highest high occurred prior to the exit date. Anything in the green would have been beyond his exit date. So as an example, on the first one, XLP in on the 18th of January. The date of the highest high was the 29th of January, and his date out was the 30th of January. So that's the date of the highest high occurs one day prior to the exit. So most of the time, he's exiting on the same day when the highest high was made. That's very good. And there's only 4 cases where the highest high is made after he's getting in. So this actually looks like he's getting a large portion of the gains, or he has seen the highest high and then is preserving. And there's only a few cases where a continuation pattern might have been useful. You'll notice that on those dates that, yeah, that actually is there was a big move right after it. That's what the low index number on the exit means. So when we copy those formulas all the way down, XL cubed performs all those tests for us. And what we can say on the longs then is that this is really the number that I'm looking at. That on average, Glenn is getting in on the 45 index and out on the 66 of an index. So he's capturing 21 index points, which is pretty good. But recognize that between 66 and 100, there's still 34 points higher. So what that means is that in all of these trades where we saw the highest high already, there was another trade, or there was another half available. So whatever he was able to capture, in this case netting 4,800 on these trades, if we're using 100 shares. There was another 34 points available, so there could have been another $5,000 left on the table, is what that means. The other thing is that if you're exiting at 66, it may very well be that there is a stop and reverse available. So if you can get short around 66, there's still 66 points down to the lowest low during this 2T time frame. So there's an awful lot of availability on the other side, on the short side. Now, it may be that some of these short side trades are actually capturing them. So when we now compare the long side to the short side, he actually did very well on the short side, almost doubling the performance on roughly the same number of trades, or maybe no, on about 30 trades, from 47 to 73 is 26 trades. And so the short side was very lucrative in this period. And he's on it. Now we're going short, so we actually like seeing that he's entering the short position in the upper third and capturing 38 points of available move. That's really excellent performance. And you'll notice that there's still, with a lot of zeros, that means that he's really doing well on the exiting on the ideal day. That's what a zero means. And so this one also suggests that after the exit, there may be some stop and reversals available, but he's doing a really good job on the capturing the short side availability. There's 34 points available above his entry, so maybe some slight improvements possible on entering just a little bit sooner, but his capture rate is really excellent. So what we would do here is we would want to take a look at, on the long side, what we could do now is go by, if you wanted to study the entries, you could now sort this by entry index. And then all of these where he is exiting near the top or in the upper third, we might look at the price patterns around the entries, and you'll notice that a lot of those are in the red. It may be that this was a continuation pattern, or not much more room available. We can take a look at where it was in the RLCO framework. There's some actual some large losses in here, some -4, -3.5. Even though the dollar value is not much, we might want to take a look at late entries, if you will, to see is there something about that where we might have been chasing or too late to get in. But I'm really pleased to see an enormous number of these being made below the 50 number, so he's buying on the right side of value and opportunity, so that feels pretty good. If we then went down and did the same analysis on the shorts, we would be taking a look at are there any symbols where we're getting in the shorts too late, like shorting at 6 is an indication we might be too late on that. That could be a re-entry, and it's simply cash pretty quick. You'll notice that his loss rates are very tightly constrained here, and being in the nature of short positions, when they pay off enormously well. That's the reason to stick around and the reason not to stay around too long in a bull market. So this spreadsheet is simply a way for us to take a look at groups of swing trade patterns. They allow us to analyze the general tendencies and then sort by performance that we're interested, whether we want to explore entries or exits, or take a look at the relative time frame to analyze our typical trade patterns. And this is tailored to each and every trade, and it can be sorted further by strategy or even by symbol if you want to see how well you're performing on a particular symbol. If you want to specialize, you can do that as well. So trade index analysis is one of the ways that we can drill down deeper into our histogram and understand our price patterns and trading performance. Thanks for your kind attention.